Hello guys, you're welcome back to my video and you're welcome back to my channel. Today we are going to discuss on the supposed way to trade double bottoms. You know, I said something on my previous video about you following the majority of traders. In the forex market, majority don't always carry the vote. Majority happens to be the losers in the forex market. That's why I said we're going to discuss on the supposed way to trade the double bottom, not how to trade double bottom. It's different. If I teach you how to trade it, is different from the supposed way you're supposed to trade it. But if today, for your very first time you're watching my video, I'm afraid to say this, you've missed a lot. And the best thing you can do now for yourself is to dive into my channel and watch our recent videos. Alright, I'm starting from the very beginning of this whole strategy to the very end of this strategy. So you have to go to my channel, watch the previous videos, and do well to subscribe to this particular one, so that the next time I'm going to release more videos on this topic, on this strategy, it will be given to you at the disposal. Alright, so go right now into my channel and get other videos and watch them. But before you do that, subscribe to this particular video so that you won't forget. Alright, so you won't forget, subscribe and go right down, watch the other videos, and then come back and watch this video. Alright, so that you get a better understanding of what all we are talking about. Also do well to like this video, comment below, tell me the area you want me to teach on, alright, to talk on, and I promise you I'm going to do just that for you, because I want the best for you, and as a result of that, I am willing to do anything possible to make sure your style of trading is improved. Okay, now can I ask you a question? Have you subscribed? Okay, cool. If you've done that, let's get down to business. So today we are discussing on the supposed way to trade the double bottoms. Majority of traders do this on their charts. Majority of traders do this on their chart. This is how they leave their chart. And I'm not against that, guys. I'm not against that. As a matter of fact, it's a strategy. Everybody does what works for him or her in market. But how come after everything you've done, you're still recorded as among the 90-something% people who lose in the forex market? How come? It's because you kept doing the same thing as every other person does. So in today's video, I will expose to you, I will teach you exactly what to do, the supposed way you're supposed to approach your trade. Okay, now in order to trade this effectively, you need what? An oscillator. You're a price action trader, I understand that. But price is bouncing on a particular level is not enough reason to why you should take your trade. So for price is bouncing on a particular level, whether the support or resistance level, it's not enough reason for you to risk your money in the financial market. You should go for more confirmations. Do you understand that? And one of the confirmation I'm going to introduce to you guys today is what? Applying. I understand the fact that you don't do it with indicators. Majority of you watching this video don't do it with indicators. But if you want to do something different from the crowd, you just have to do something different. Okay, now the only thing you're doing different is what? Introducing you to an oscillator. Please apply an oscillator to your charts. Okay, this is what you need to do this effectively, to trade this the supposed way. Now let's do that. If you don't know how to insert an oscillator to your chart, let me help you do that. Okay, we go here to the insert indicators. Now we are going to the oscillators. Let's make use of the stochastics. Alright, with the setup this way, 1433 colors, just play around the colors and the rest, and then say okay. Alright, now you should have this. Now let me tell you what to do, guys. The moment you expect to trade double bottom, or you see price establishing double bottom like this, after inserting an oscillator, the only reason you're inserting this oscillator is for full confirmation. Why is it that? Because why I said something earlier, price is bouncing on a particular level is not enough reason for you to do take a trade. For example, price bouncing on this level, this support level, it's not enough reason for you to do to buy this trade. Because why? One, this candle is a pattern itself, and once you see candles like this, all right, you expect the next candle to do to fill in this week. All right, So this, because this candle is a pattern, so you expect the next candle to do what? To fill in this week. So this price, my friend, you're seeing here, ordinarily, if not for other confirmations, is supposed to do what? To fill in what? This week, either from the next or the next 2 candles or 3 candles. This week was supposed to be filled, and imagine the next candle coming to fill this week. Then you're in trouble in this trade. If you already took it as what? A buy, seeing this pin bar, then you're already in trouble, because the next candle coming to fill in this week is probably going to break this level, and price breaking this level, you know what's up. All right, so that's why I said price is bouncing on a particular level is not enough reason for you to do what? Risk your market money in the market. Now that's why I'm introducing you to what? An oscillator. Why am I introducing you to this oscillator? Is for more confirmation. Don't do the way 90% trader does. Now you have double bottom here, right? Double bottom. The next thing you have to do now, after inserting this oscillator and seeing double bottom price bouncing here, what do? Go straight all the way. Go straight to your oscillator. Go straight to your oscillator. Is oscillator doing something the same? Is it doing the same thing with what the chart is doing? If the answer is yes, then expect this week to be filled. But if the answer is no, then expect and wait for the perfect time to do what? To take this trade. Now you can see that this level, these are equal levels, right? Price came all the way here, equal level, and bounced. But what happened on the oscillator? Oscillator gave us what? Different thing. Lower lows. Price gave us what? Equal lows. But oscillator did what? Gave us what? Lower lows. So they have done something different. This is where the strategy called divergence comes in. Oscillators are generally meant to follow prices what? Up and down. But the moment you spot a difference in the market, then understand that these guys are in control. The market makers are what? In control. The people that move the market are in control right at the moment, because they have, if they step in, everything changes from what the oscillator is doing. So when they step in like this, they start manipulating the market, recording something else on the chart, while oscillator, because they are manipulating the chart, it will start recording what? Something else. Now in this case, the price was giving us what? Double bottom. What happened on this oscillator? It was giving us what? Lower lows, not equal bottoms. Right? Double bottom here and equal length. Now oscillator was giving us what? Lower lows, not what? Equal what? Lows. So at that point, you know that yes, oscillator is already doing something else. So at that point, what do? Like I said in my previous video, as divergent trader, you follow the direction of what? The oscillator. Except the chart, this chart you're seeing is also in direction of the oscillator, then you can consider following it. Why would you follow this chart? Because it is highly manipulated. The big banks manipulated a lot. So if you follow them, you're easily going to be manipulated, and that's why they keep recording 99% traders lose money in the market every day. So as divergent traders, what you should do is what? Follow the direction of what? The oscillator, because the oscillator is the only thing that they cannot manipulate. Now seeing these double bottoms, now go what? Step down to your to your oscillator, check, compare them. Are they doing the same thing? If they are doing different things, then you wait and do what? Follow the direction of the oscillator. It doesn't mean you should just take this trade as what? A buy. This should take you back to my previous video, how to trade divergence. Right? You will understand a perfect place to take this trade as what? A buy. Because even with this candle coming out, it's not enough reason for any trader to do what? To take this trade as a buy trade. Even with this green candle coming up, it's not enough reason for any trader to do or take it as a buy trade, because you don't know the next trade, the next candle might come down to fill this, because this candle is a pattern itself. So each time you see a pattern, a candle with a pattern that is a pattern itself, it means you should expect the next week to cover that what? Pattern. So even with this bullish candle, it's not enough reason for us to do what? To buy this trade. That's why you should go now, watch my video on how to trade it, to trade divergence, so you know the perfect time to follow this oscillator up. The oscillator must do what? Break the previous level before taking this trade what? As a buy. So let's trace the candle that broke this level. Good. It was after this candle. In this case, it was after this candle that the market, after this first bullish candle, oscillator did what? Broke that level. It broke the previous level. Where is the previous level? This here. This is the previous level, the previous low. Right? So oscillator has gone beyond that previous low. This is where the divergence comes in. Now this time around, you now wait for it because you're waiting to buy. You don't just buy immediately. This candle is formed. You're waiting for it, for these lines to cross each other and do what? Close, break this this level now, this previous high now, this previous low, break it and go what? To the upside. Once oscillator breaks this level, then you can take this trade what? As a buy. And the moment you buy this trade, your stop loss is supposed to be where? Just below the pin bar, like 2 or 3 pips below your what? Swing low. Now you've taken this trade as a buy trade. Where should your take profit be? There are 2 places here. We have the first level here as a resistance level. We have the first resistance level here. Alright, so it will be mad enough for anybody to ignore this level and come setting his or her take profit at this level. Do you understand? Now see what happened in this market. See this price. See what this candle did here. See what this particular candle did. After this spinner candle now, this spinner top, see what the next candle did. It came all the way down, threatening to sell. And remember, we had a level here. This level now. Now after this candle now, this guy threatened to sell. Because these guys were the one moving the market and they really want to go up to a particular level, they threatened so many people to sell this market, and so many people sold this market seeing this level. Okay, so as someone who is buying this trade, the first level you should target as a take profit is where? This level, because market is likely to come here, bounce and go down. Alright, but now see what happened here. You were lucky enough for this was broken. You're lucky enough that this level was what? Broken. And see now the next target should have been where? Just in the body of this candle, where this candle started from. Many of you will do the mistake of going here to set your target. Don't do that, because these wicks you're seeing, there's a reason why these wicks are there. So many traders were hidden in this place, up here. So many traders are hidden up here because so many people chase this trade as a buy trade. At the end of the day, they rejected them there as a wick, with a wick, and it was dropped, went up again. See that they still came and bounced here. They refused to break this level because I hit so many traders up here. There are so many others up here. So breaking this level will get those guys breaking even, and they will run away. So they don't want those guys to run away at this moment, so they are faking everybody to go up. At the end of the day, see the rejection. So you now setting this looking for where to set your take profit should have been where? On the body of this what? Candle. And if you set your take profit there, see what happened. You were taken out of this trade. Okay, automatically taken out of this trade. So what did I repeat? The moment you spot a double bottom, go down to your oscillator. Is it doing the same thing? If the answer is yes, hold on a little. If the answer is no, they are doing a different thing, good and fine. Wait to follow the direction of the oscillator. Now in this case, see what happened here. Oscillator broke the previous bottom, but here they gave us what? Equal bottom. Here the oscillator broke the previous one, giving us what? Lower lows. No longer equal bottom at what the chart is giving us. At this point, you wait to follow what? The direction of the oscillator, and the only time you can execute this market as a buy trade is when this oscillator have broken this previous what? Level, this previous low here. After that, your take profit, your first take profit should have been where? The next support resistance level, rather the next resistance level. Because see what happened here, price came here, and the next candle, this bullish candle now, that is here, threatened to do what? To sell. Threatening to do what? To sell. Is sold to this point, but now did what? Went back up. Why they are going back up? Because they want to get to a particular level before reversing. So they went back up, and now after going back up, the next place you should target as a take profit is not here. It's not up here, guys. It's not. This is not a resistance. This is it. This is where money. This is a money box. Okay. There are so much orders here. So what you should do for your next target is where the body of this what? Candles. Keeping your I've explained why you should not keep it here, because they can't get to that level. They are hitting so many traders there at this moment, and they will have to sell until those guys stop loss are all hit before they will now reverse back up. And you see the market is trading way down, and this is a 4-hour chart. All right, And you can also see that this level happened to be what? A strong resistance level. So after market breaking this, successfully breaking this level, this for resistance here, the next one should be where? Here. Now let's go for another example, guys. Another example. Good. This is another one, guys. Let's talk on these two first. These two. Now this is a double bottom, but this time the market went all the way down. They went all the way down. Breaking this previous bottom. This is a double bottom, guys. But this time they just want to fake so many people to take this trade as is sell. See what happened here. They broke this level, this previous level, with a powerful bearish candle. The next candle came up, tried to go up, but did failed. The next candle came up, failed. All these ones are just manipulation. They want you to sell this trade. The only way you can know that this thing they are doing here are just manipulation is to go down to your oscillator. Is the oscillator doing the same thing with what the chart is doing? If the answer is no, then you understand that this thing is fake. Now see what the price gave us. Lower lows. What oscillator did gave us higher lows. Oscillator is giving us higher lows. So that's why you understand that these guys are faking people. But if your chart is like this, how do you know that all these things, all this movement they are doing here are fake? Because you would have taken this trade as a sell. You listening to it, be honest to yourself. You would have taken this trade as a sell. Seeing all these reactions here, you would have said this is a retest. The next candle came down, boom. You would have said yes, it's a retest. You would have taken this trade as a sell, and at the end of the day, what happened? You were stopped. So the only way you can understand that this particular thing they are doing here is fake is by having an oscillator. After seeing something like this, you step down to your oscillator to ask yourself to confirm, is this thing they are doing here the same with what the oscillator is doing? Is the oscillator recording the same thing? If your answer is no, then understand that it is fake. Now you should understand a better place where you should buy this trade, because it is a double bottom. Understand a better place where you should do to buy this trade. Watch my previous video and you will know how you should do where you should buy this trade. To be honest to you, I won't take this trade as a sell, because I already know what's going on in the market. I already know the principles. I already know what I am teaching you. So I was exempted from this disaster. I already knew all these things occurring here were just manipulation. And now the second way to know if the particular breakout, something like this, is fake or not, is to go down to your oscillator. Where is the oscillator itself? Is where are the oversold at this moment? So what were you taught concerning buying near the oversold and near the overbought? You were warned not to do that, isn't that? Yes. So the oscillator is already here at the oversold zone. Seeing all this reaction that they are rejecting this level, you went out to your oscillator to check. Oscillator was already where at the oversold level. So and you advised not to do to sell near the support or near the resistance level. So you waited for this price to do this level to do this oscillator to do leave this level. That is the second way to understand. The first example was here. This one, all right. Double bottom. And oscillator was also where at the oversold. Oscillator was also where at the oversold zone. Why this one was also where previous support level. So these are the two confirmations you've gotten. Now the second one is for you to do wait for the perfect time. If oscillator was giving us lower lows or higher highs, wait for the oscillator to come back and do break this previous level. Then after it breaks this previous level, you should take that trade as a buy. Those are now three confirmations. The first confirmation is that on the chart price are going to a support level. Second confirmation is that on the oscillator, the oscillator is already where or the oversold zone. The top confirmation is it was giving us lower lows. It was giving us something different from what the chart is giving us. So at that point we waited for the perfect time, and the perfect time is only when this price oscillator has broken this previous level here. This is the previous level. Only when it has come back to break this what previous level. Alright, then you should take your trade. Now this is the second example. The same thing applicable here. First, price came down here, but this time did not bounce, it broke. Fine, it broke. What did you do as traders? We did was step down to our oscillator. Is it doing the same thing? One, where is the oscillator? At the oversold zone. Let me wait. Secondly, what is oscillator doing? Doing different things. The chart is giving me lower lows and the oscillator is giving me higher lows. And that's another thing. Let me wait. Alright, once you finish waiting, now when to take this trade as a buy is what? When this market have done or come back to close above this previous level. Now see the candle that closed above this previous level, this bullish candle here. So at that point you took your trade where at this level to where the next resistance level, when it successfully break this level, you did what? You took your trade where at the body of this one. If it breaks this level, then do you understand me, guys? I repeat, from this example, the price did what? The price came down here. This one was quite different from the other one. This one happened that it happened that this price broke this level. Price broke this level first, but fine, it broke this level. We now did was step down to what? The oscillator. What is oscillator doing? First, the oscillator is what? In the oversold zone. So we cannot sell anything once the price is near the oversold zone. Talk more of it being inside the oversold zone. So we waited. Secondly, the price is giving us something else, oscillator is giving us something else. So we waited again until when the price now did what? Came back and closed above this previous level. And now what is the candle that where is the candle that closed above this above the previous level? Is this candle now. After this hammer, the next candle, it closed above here. At that point, you took your what? Your trade as a buy. Okay, now let me take the last example in this video. We came here. This is also a double bottom, guys. This, my friend, is also what? A double bottom. And now this one is quite different from what? The first, because the price this time will give the first and second, because here the price did what? Gave us higher lows. The first one gave us what? Equal bottoms. Second one gave us what? Lower lows. Third, this one now is giving us what? Higher lows. So it is something quite different from the other ones. But now that is not the point. The point is, where am I supposed to enter this market as a buy? Now first I will step down to my oscillator. Where is my oscillator? At the oversold. Fine, I'm expecting to buy because here the price is rising, right? So we want to follow it and do what? And rise. But before we follow it and rise, we have to do what? Confirm. We now went to our oscillator. Where is oscillator? At the oversold zone. Okay, confirmation number one, because very soon it will leave the zone to the upside, it will rise. The second confirmation is, what is it doing? Is it doing something different from the chart? The answer is what? Yes. It was giving us what? Lower lows. While the chart was giving us what? Higher lows. Alright, giving us lower lows, the chart is giving us what? Higher lows. So that is the third confirmation. At that point, where are you supposed to buy exactly? Once the price comes back and close above what? The previous level on the what? Oscillator. Now let's trace the breaking the candle that made this oscillator to break. Good. This candle. So after this was the candle that made this one. This was the candle. So after this candle, see where we took our trade as a buy. From here to where? This support, this resistance level. This is a strong resistance level. So you don't ignore it. You see, it was once a support zone turning toward a resistance. Alright, so this is a strong level. You must not ignore what? That level. You took all this trade all the way up here. So guys, this is one way to trade what? Double bottoms. The same thing applicable to double tops. The same scenario, the same precautions you should take. And now these patterns are mostly effective. For example, the double bottom is mostly effective when the price has already gone down. For double tops, is mostly effective at where? The top of the trend. I understand the fact that you might not understand this video very well. That's why you should go back to my previous videos. Go to my channel, watch those videos. Any video you see there, watch it. it will give a better understanding of what I'm talking about here. Because if today is the very first time watching watching my videos, you've missed so many things. After watching that video, do well to subscribe so that when I release the next topic next week, you're gonna receive it anywhere you are. Okay, because I want you to follow me up. I want to cover up all these topics right now. I want to cover all these topics. You can see that there are so many things to talk about. So I want you to subscribe so that you do what, get each of those videos anytime I post them, anytime I release them. You can save this video offline to watch it over and over again. So guys, I hope I was able to convey or give you something meaningful in the market today. But I was able to review something very interesting to you today. Alright, like this video and comment, share it. The most important thing is to do what, subscribe and put on all your alert buttons, so that once I release a video, you're gonna notice it and you're gonna come watch it. I wish you all a successful trading career. See you on my next video.